Hey everybody, thanks so much for joining us today. I am here with Matt Rinkey from Illumination Wealth. He is my personal financial advisor, and I wanted to bring him on this Zoom call today with us because I'm getting a lot of questions from clients, family, and friends just about kind of the state of the financial market. With the volatility going on, people are asking, should I pull my money out? Should I leave it in? So I have a couple of specific questions that I want to ask Matt today, but first I'm going to turn the time over to him to tell us who he is and where he's located and kind of what he does, and then we can jump into the questions. So, go ahead, Matt.
Thank you. Yeah, thank you. It's a privilege to be here and honor and pleasure to work with you and be a part of your community. As Heather mentioned, my name is Matt Rinkey. I'm the founder of Illumination Wealth. We're located in San Diego, but our clients are all over the country. And we want to be able to make an impact no matter where our clients are, because their lives can take them, pretty much everywhere. And we want to help support them and our clients to live their best financial lives. And I think it's an opportune time for us to be talking because it's a pretty unique environment that we're living in, both economically, within people's careers and businesses, within the investment and financial markets. And so I think hopefully we can bring some stability and insight for people during this, trying and, uncertain time.
Yeah. So my first question, we'll just jump right into that is, so we see the market continues to kind of go up while we have a lot of terrible news coming in our way. It's also an election year, and there's so much uncertainty. So how does the market keep going up amidst everything that's happening right now?
Yeah, that's a great question. I think it's probably, very hard for people to understand because they see the news, they see headlines that says like the biggest unemployment rate, millions of people filing for unemployment week after week after week, something that we haven't seen like ever this quickly. And what people need to understand is that the stock market, is not the news. The stock market is always looking forward 6, 9, 12 months. And it already dropped on concerns of the market, in the economy being impacted. And so since that time, the market's rallied 25% off of its lows. A few things have actually changed, even though we keep seeing coronavirus, unemployment, talk about the Great Depression, is that the Federal Reserve made some changes and they're essentially printing money and have lowered interest rates. There's a huge stimulus package. So some of these effects of actions that are taking are being seen, and some of the risks to the financial system are being taken off the table by these government actions. So the market is now looking ahead. In addition, there might be things which, there's drugs and treatments out there that are showing some promise and some good news. And so perhaps despite these same negative headlines, there are some things that might be changing that might improve the situation 6 to 9 months out. So the stock market is not the economy. The market really doesn't care what's happening in the news today. The news today is history. The market's looking forward. So that's what people need to understand and, recognize that even when things are good, the market seems to start to go down while the news is still good. So it happens both ways. It doesn't just happen when the market's down that it rallies. Sometimes the market goes down while the news is still good about the economy. And we don't see that news until down the road. So we got to separate the news versus what the stock market is actually doing.
Yeah, I think it's one of the big questions I get is, obviously I'm in real estate, so I work with a lot of people who do pull money from retirement accounts to purchase homes. And I think they look at those numbers and they get fearful. So when they see the big drop, the first thing they want to do is jump in and pull out all their money, which I'm going to let you speak to that as to whether or not that's a good idea. And secondly, for people who are maybe thinking about investing because it is low, should they be investing conservatively? Should they be taking a higher risk investment? You can speak to some of that, because I think those are the really pillar key questions that I get quite often. And I think because we don't have a crystal ball to predict the future, and really not knowing what's going to happen, even with this whole coronavirus thing, it's got people, I think, up in arms and a little afraid. So
yeah, for sure. It's a very fearful time. It's a very scary time, a very uncertain time. And some of the key factors is like, how do we separate our emotions from the investment decisions and the long-term investment decisions? Selling after a drop is not a good idea. It can create damage to someone's investment portfolio that could be never recovered from. And if you didn't sell at the peak 2 months ago, and now you want to sell, why is that a good decision? And how then do you know when's going to be a good time to get back in? Because we can't keep our money in cash the rest of our lives, which earns nothing. It won't support your lifestyle that you want and that you need for your retirement and for financial independence. So I think a few things, whether you're a young investor, these market declines provide a great opportunity, and we should be welcoming them with open arms. If we have a while until we're going to be living off of this money, this is a great thing. Every market decline is very good. Now, we need to have some stability in our income to help us through that, but market declines are a good thing. We shouldn't be getting scared. We should be wanting to invest more. In the stock market, it's always that place where when things go on sale, people want to run from it instead of, let's go to Walmart and get the sale. Let's go to Nordstrom's while they're having a sale. When stocks go on sale, people don't want to have anything to do with it, which is counterintuitive. Now, I think for retirees, when these environments happen, it's a little bit different. Or somebody who's going to be retiring in the next couple of years, it might not feel as good knowing that their money is declining and they're about to retire or they are retired. But if retirees are, managing their portfolio appropriately, they should have a very good amount of conservative investments that are stable and that have actually grown over the past few months while the stock market has declined. Now, if you have enough of those stable investments for the next 1, 2, 3, 4, 5 years, which you can let the stocks recover, which they always have. And so it's not that I'm retired, it's when do you actually need those stocks or that growth part of the portfolio? And for most people, it's not today, even if you're retired, it's years down the road. So as long as you have that conservative bucket, which everyone should, it can allow the stocks to recover, which they always have. So this goes back to some of that planning, but selling after the decline is never proven to be a fruitful strategy. It's a very damaging one for somebody's financial life.
Yeah, I know even for me, you and I have had a lot of discussions around this, just because, everybody has an opinion on what you should do. And I have had quite a few people pull their money out just because they're afraid it's going to go down even more. My philosophy is just don't look at it if you're in it for the long haul. And, if you're going to get into it, I think you probably should be in it for the long haul. And I love what you said, and what you've told me over and over again is it will come back up. You just have to give it time and let it happen. So, and then just, it's a great opportunity to buy while it's low, especially if you've got that time to do it. So.
No, those are great points. And I think the other thing, knowing that, you're a real estate advisor, you have a lot of real estate investor clients as well, that, with stocks, you can sell with the click of a button. It can happen instantaneously. When you own stocks, they are a long-term investment. They aren't for today or a year. Anything can happen in a year, but we know over long term, they grow as long as we don't make poor decisions along the way. But we're, the same when it comes to real estate. We don't have the same, let me just sell my house today, Heather, and boom, it's gone. And people are keeping their real estate investments, even though there might be, some temporary, changes to them, or a tenant might not be able to pay rent. But if it's in a great location, it's in a good area, it's going to be a good investment over the long term. But you can't just sell it emotionally like you can stocks. And so people need to create that separation between their stocks and the ability to just, let me sell, because I'm scared. And that's where a good advisor will come in. They'll help you make unemotional decisions around your investment portfolio, which can be extremely valuable during times like this.
Yeah, I completely agree. I think my last question is, and it's probably the question of the day that everybody asks you, is what's the overall outlook of the financial economy? What can we expect? Do you have your crystal ball now?
Right, absolutely. And I think, as a financial advisor, we're about, really planning for the long term, knowing, where odds are in our favor and making decisions and controlling the factors that we can control. I do not know what I'm even eating for dinner tonight, but I'll give you my scenarios of what we're seeing. I think the base case in the financial markets is that it's going to be a slow recovery. It's going to take 6, 12, 18 months to get back to normal, and there's going to be a lot of volatility along the way. There's not clear solution. On one hand, we've got the Federal Reserve and the Congress creating fiscal stimulus and low interest rates and giving rebate checks and doing things to help businesses, but we still haven't fully solved the health crisis that is creating the uncertainty. We don't have a vaccine. We don't have a pure treatment that clears this thing up. So on one hand, we have this, stabilizer, but it's not fully in effect because we don't know what the health crisis, conclusion is. So I think it's, going to slowly go back to the old way of life, but not really until there's an effective treatment or vaccine. So this might be, a very volatile, news-driven environment for a period of time over the next 6 to 12 months as one kind of like the base case scenario, 50% probability. The other two scenarios I see are we go back to work, the virus spreads again because we lifted the veil too quickly, and next thing you know, it's like people have to go back into quarantine and go back to sheltering in place, and that's even more demoralizing because it's a second round of this, and then it extends things even further economically speaking. That probably has a 25% chance, and that means the financial markets are probably going to go back down. And then the other scenario is that we go back to work, people who are high risk kind of stay at home, but maybe schools start, companies start back up, we get some good news from a treatment, and there's, we keep some social distancing and the market recovers a little bit quicker. I think that's a 25% scenario, but I think we all want a quick recovery. We all want this to get over as soon as possible, but we don't know exactly where it's going to be, but we need to know that eventually we will get through this. We just need to be able to make good decisions now. So I think we just need to be expecting of a lot more news, continued bad news, some glimmers of hope, and some volatility until the market can truly get its footing and recover and go off to new highs. I think that's still a little ways away before we can expect that, but it shouldn't be unexpected.
Yeah. One last thing, you mentioned a few times the importance of having a good financial advisor to help guide you in your investment decisions. So tell everyone a little bit about how you work, because you work very differently than say maybe like an Edward Jones, and that's why I chose to actually move forward and work with you for my portfolio, just because of how I guess just how many spectrums that you cover as far as the financial portfolio. So can you share a little bit about that?
Yeah, absolutely. So, our responsibility is to help our clients make great decisions across all aspects of their financial life. Do that in conjunction with what your values are, or their values are, and help them live a great life and do planning along the way so that they can continue to make good decisions. And so our approach is, we know that every financial decision, they're somewhat interrelated, whether we're talking investments, there's a tax component, whether we're talking business or real estate investment, there's tax, there's cash flow, there's debt and financing and mortgages. We want to make sure that all of those decisions are in support of what our clients' goals are. We don't want to be tied to just give me the wealth that you've created and let me put it in this mutual fund and get a commission, and then I'll talk to you once a year. That doesn't work. It's not a good relationship and a good system. We need to know what's true to your heart, and how do we make sure all of your financial choices lead you to where you want to go. And so that's our approach. We really are completely customized, because there's not another Heather in the world that wants the same things, that wants to live the same way, that has the same dynamics, whether it's business, investments, family, goals. And so everything is just custom tailored to our clients, but through a proven process that tells us exactly what we need to be doing, how we need to be planning, and what decisions we need to be making. So it's a privilege for us to be able to work on such a, I would say, intimate and deep level with our clients.
Yeah. And we meet quarterly, you and I, and we talk. You probably talk to me more than you want to, because I'm always bugging you, but I don't make a financial move without you. That's the point of having you around. So I appreciate that. And I appreciate that you do business that way. So tell everybody how to find you. I'll also link to your website and whatnot, but if you can share that, we can wrap this up and you can get back to work. I know you're a busy guy.
Yeah, absolutely. So, our main place, the website is illuminationwealth.com. We have a blog there that's very active. We also have a YouTube channel that you can look up, Illumination Wealth, where we're, sharing videos, interviewing other entrepreneurs and business leaders of today like this. And so, always trying to put out resources and be of service. So I know that this is a challenging time for people. We're staying abreast of all the changes from the Paycheck Protection Program to the stimulus package, that we're just trying to get information out so that we can all get through this together. And so don't hesitate to reach out if I can be, answer any questions that you have. There's no obligation. This is what we're here for.
Thank you so much. And I appreciate you taking the time, and hope this was helpful for everyone. And we'll talk soon.
Sounds great. Thank you.
Thanks. Yep. Thanks. See you later.
Bye.